Oh man, so the crypto collapses continue. As you guys know, during this downturn, we've had many a victim. We've covered off the Celsius drama. We've covered obviously the Terra Luna drama. We spoke about 3AC, but now that 3AC contagion has continued over to Voyager, as we covered on this channel. But in this video, we're going to do some investigation. We're going to dig deeper into some of the secrets behind Voyager, a $1 billion creditor of 3AC. Guys, smash on the like button. Don't forget to subscribe. We're going to get some really interesting insights here, delving deep here into the analysis of Voyager and what they were up to with customers' money. Guys, don't forget to smash on the like button and subscribe. This video is brought to you by BYBIT. Links in the description if you want to take any trades with us during this downturn. Now, as you can see, well, this is a bit of a different video. We're going to go through here through this blog post by Woo Blockchain. Really good article, and I want to highlight some of the key findings to you guys, and we'll just walk through this together. So, as you can see, Voyager 3AC's sudden revelation of a $1 billion creditor is a mystery. Its assets are huge, reaching $6.2 billion as of last year, largely from customer deposits. Okay, so again, for those who aren't familiar, Voyager was very similar to Celsius in that it was a borrower and lending platform. Okay, so 3AC borrowed a lot of money from Voyager. It had huge exposure. Voyager had huge exposure to just one crypto hedge fund, which was 3AC. And this is the kind of stuff I'm frustrated with, right? How are we seeing so much bad practices which are carrying on from TradFi? In fact, I'd argue at this point worse. Guys, I'm not here to defend TradFi, but it seems worse. And you're going to come on to why shortly this is worse than TradFi. You guys are going to be shocked. Voyager added 115,000 customers in the first quarter, but they lost $61.4 million. Okay, you can see that here, according to data. The vast majority of loans offered by Voyager are unsecured. Unsecured, guys, okay? They're unsecured, no collateral, but it believes that based on its due diligence, it can confirm that the borrowers are quality financial institutions with sufficient funds to meet its obligations as they become due. Unbelievable load of rubbish. What does that mean? The vast majority of loans offered by Voyager are unsecured, but it believes, based on its due diligence, it can confirm that the borrowers are quality financial institutions. Well, how did that work out for you? Who is doing your risk management? Really, like, who is doing your risk management? It's insane at this point. Do you have like a 2-year-old doing your risk management? In fact, I wouldn't be that harsh on a 2-year-old, right? Because that is just ridiculous. I mean, that is just ridiculous, lending that much, and also so much of their portfolio going to one person at 3AC. This is crazy. Okay, let's keep going. Brian Brooks, a director of Voyager, is the former auditor of the OCC and the former CEO of Binance US. Okay, crazy. Voyager, through its US operating subsidiaries, operates as a crypto asset broker that provides eligible retail and institutional customers with access to its digital platform to buy and sell crypto assets in one account across multiple centralized marketplaces. Voyager offers customers order execution, market data, wallet, custody services for its proprietary digital platform. Voyager also launched the Voyager loyalty program. Fine, we don't care about that. For the quarter ended March 31st, okay, so that was just the March gone just now, total revenue was 102 million. Okay, so 102 million, down 38% quarter over quarter. The net loss for the quarter was $61 million. It's a loss-making business, by the way, guys. And this is trading over the counter in America, okay? You can buy this stock. People are buying this stock. I mean, you wouldn't buy it now. It's hugely crashed. So you can see here the financial data. They were losing EBITDA of minus 53 million. The company's main business is to provide customers with services to purchase, sell, or execute crypto asset orders. So the main operating income is transaction fee, okay? Transaction fee income is their main business. Voyager saw a decrease in transaction fee revenue in the first quarter due to the downturn in the crypto market. Transaction revenue was 33.39 million in the first quarter, down 38% year over year. The company claims to follow through with strengthening and expanding its wallet payments business and has acquired Coinify. Okay, the company's second largest business is to earn fees from crypto asset lending activities. This is where it gets messy. The company's second largest business is to earn fees from crypto assets lending activities with institutional borrowers. This is where 3AC would fall into it. These lending agreements generally are on an unsecured and secured basis, either for a fixed term of less than 1 year or can be repaid on a demand basis. Interest income in the first quarter was 31 million. 3.6 times from a year earlier, okay? So it was about 10 million the year earlier, and now it grew to 31 million just through the interest they were getting from lending out to these institutions. As you can see from the financial statements, the collateral is only about 1/10 of the total loan. So in other words, they say we do a mix of unsecured and secured, but the secured bit is about 10%, right? So really, they're only holding 10% to all the crypto assets loaned out. You can see that. This is billions, right? So this is 2 billion loaned out, and you're seeing that only 200,000 is 200 million is held in collateral, only 10%. Insane. As of the first quarter, Voyager had the following accounts receivable in cryptocurrencies. Okay, so in other words, they were owed USDC, 633 million in USDC. They were owed 191 ETH. They were owed 53,000 Bitcoin. And they were owned 2 million Luna. There's no point of being owed that anymore, is it? But you can tell they got a big hit, did Voyager, from the Luna shock as well, because that 2 million coins of Luna would have been worth a lot at its time. Okay. USDC, ETH, and BTC are the main ones with a total value of 2 billion. Okay, the following 7 companies are the main applicants for the loan, and the fee is based on the percentage of crypto assets lent and denominated in the related crypto asset. So counterparty A, borrowing rates 1% to 7.5%, and they've been lent out 728. I believe these are in thousands. Yep, because that adds up to your 2 billion. So 728 million went to counterparty A, 326 million went to counterparty B, etc. So you can see how their risk was shared just amongst these key guys here at the top. Okay, these are the key institutions that they lent out most of this to. According to the previous official announcement, the loans include 15,000 BTC and 350 million USDC from 3 Arrows Capital. Okay, so this is the one that fell into trouble. 3 Arrows Capital fell into trouble. This is what has spiraled Voyager into trouble as well. This just shows, it just takes a little bit of contagion, right? We know 3 Arrows Capital got affected by the Lunar issue. We know, therefore, they got affected by staked ETH peg, that Ethereum drop, the market's dropping. Okay, now 3 Arrow Capital gets in trouble. You got Celsius getting in trouble as well. What effect does that have on the market? Now Voyager's in trouble because they've got some exposure to 3 Arrow Capital. If Voyager goes in trouble, who's got exposure to Voyager? It's just a continuous circle with tentacles going everywhere, exactly like traditional finance. With bad practices, which is causing this, right? They're just getting exposed for bad practices, unsecured debt, misallocated. What do I keep harping on about? Those exact same things happening time and time again. And trust me, this is worse than a normal TradFi bank and what they're doing at this point. With total value of $1 billion estimated market price at the end of March, which represents half of the total. Okay, guys? Half. They're really important. When I talk about misallocation, I'm not just making this up. $2 billion they have in total. Okay, total creditors, and $1 billion of that is with one counterparty, 3 Arrows Capital. How are you running a business with half your debt lent out is going to one crypto hedge fund, that which, if you did any due diligence on that crypto hedge fund, is a bunch of degens who trade exactly like retail traders in crazy risky plays? I mean, are you insane? You're running half your business, a publicly traded company. Insane. And this goes to show, this is not just to do with decentralization. Voyager is a publicly trading company. And so anybody who says we don't need regulation, I mean, what side are you on? Are you benefiting from this? Is that why you don't want regulation? Does your company do some of this? Anybody seriously invested in crypto space for the long run, building with good morals and ethics, they want regulation. They want a good amount of regulation, but they don't want it to be overarching. That's it. We need regulation so we can move on here in crypto. Although we have no way of knowing the exact identities of the 7 companies based on the amounts owed and the disclosed registered companies of the companies, A is in the British Virgin Islands, B is in Singapore. It seems likely that both companies, A and B, are 3 Arrows Capital. So they're thinking A and B added together gives you the billion, which is just 3 Arrows Capital between them two here. 3AC's official website also indicates the terms and conditions. These terms and conditions shall be governed by and construed in accordance with BVI law. The BVI court shall have non-exclusive jurisdiction over all claims or disputes. Okay. In addition, as of March 31st, 2022, Voyager holds 25 million BTC, 270 million ADA, 170 million VGX, that's their Voyager token, and a host of other cryptocurrencies with total value 3.4 billion. So Voyager has 5.6 billion crypto assets held and receivable, which is almost all of its assets. Voyager had 6.22 billion in assets and 5.9 billion liabilities, including 5.68 billion in crypto assets held by customers. last year. Okay, so that was the last year figure. It added 115,000 customers accounts in the first quarter, mostly North America, and hired 4-time Super Bowl champion I don't know Super Bowl stuff, guys. Gronkowski as an ambassador. We can think of Voyager as a bank that takes in depositors' cryptos assets and provides basic operations such as transfers and transactions, while also lending deposit to other institutions to earn interest. Yeah, so in other words, they'll take your money and they'll go lend it somewhere else to make more money. Doesn't that remind you of Celsius? And we don't know what risky plays they're taking because the gap they make is the difference, right? That's their profit. We know companies are built to make profit, right? So you got to look at what are the incentive structures. If I deposit into Celsius, right, and Celsius are promising me 9% return, right, they now need to go on a mission to make my money make more than 9%. By definition, when the higher APY I'm getting, if it's 9%, if it's 12%, 13%, they have to go and make more, substantially more, to justify their overheads, to make a profit, and to do everything else that their business is doing. If they're giving me 9%, they need to go make 14, 15%. What plays are making 14, 15% in a bear market? Degen plays, right? Crazy, risky plays. And so their bets become riskier, riskier, riskier as they chase more and more profits. And the more APY they're offering you, if it looks too good to be true, it's because they're doing something very degenerative at the back end to make those returns. Very, very important we understand that. Analyzing from this perspective, we can measure the level of risk by 2 indicators. One is the reserve ratio and the other is bad debt ratio. Voyager has a reserve ratio of 60.4%, which is a pretty safe number for a bank to run on, but companies like Voyager have less tolerance for risk than banks, so it makes sense to keep more reserves. As for bad debts, it's safe to have a bad debt ratio of 5% or less for general corporate banks' short-term loans within 1 year. While Voyager's short-term loans, 3AC needs to be repaid by June 27th this year, so it's considered short-term, have a bad debt rate of 50%, which is very, very dangerous. There you go, guys. Okay. Horrible, horrible misallocation, irresponsible use of customers' money, and yet another one, like DJ Khaled says, another one. Celsius, Voyager, who's next? Who's next on the chopping block, right? BlockFi trying to get FTX to buy some shares, already taking a 250 million loan from them. Who's next, right? We know there's some other smaller lending and exchange platforms. What's my message to you guys all before, I don't really want to finish this. You guys can go ahead and finish this at your own leisure because this video is already at 12 minutes. What is the point of going through this together with you for the first time? Is to look at when you dive into these companies and you really understand them, where is your money going? And that in-depth piece of work I've just done with you there. If I was to put any serious money into Voyager, I would have done that research before doing so. So if you've got any serious money, if you had any serious money in something like Anchor Protocol, if you have any serious money in Celsius, if you had any serious money in Voyager, or now you can think, what are the other lending platforms that are giving me crazy APY? Or am I in some crazy sort of, magic, returns where I'm getting crazy APYs? Am I in any of those plays right now? Write them down, reevaluate them, and just in a cold, sober day of light, ask yourself, is it too good to be true? Do I understand what they're doing with my money? Can I track back something like Voyager, where maybe you put your life savings in Voyager to go sell 5% returns? Do you know that 50% of their debt is sitting with one crypto hedge fund? And did you know that that crypto hedge fund is playing risky, risky bets? That's what you need to ask yourself, particularly in such a bear market. It's not worth you chasing those small returns for the sake of potentially losing all of your net worth. Not worth it at all. You're far better taking away your coins, losing out on any APY, putting it on a key, on a ledger, holding it in your hard wallet, and coming back out and starting doing more of these risky yield farming and staking options or lending options when you're in a bull market. Just not worth it. Take it out. Any companies which are doing this, I've been saying this for a long time, it's not just unethical, it's going to get you wrecked. Right? Misallocations, rehypothecations. These are all the same things we're seeing. We don't need to be surprised by this stuff. It's in front of us and we know this and we've learned it from TradFi. But clearly we haven't, right? Because crypto is pulling the wool over the same people's eyes just with a new wrapper. This pretty wrapper of crypto and decentralization. If that's what we've become, that is not a great use of crypto and the technology we're building here. And that's not why the majority of us are in this crypto space. We want to make a true difference from TradFi. We want to improve. We want to make things better. Just doing the same stuff, but in an even more degenerative way, is not what we're here for. Hope you guys smash up the like button. Don't forget to subscribe if you enjoyed this type of video. Let me know in the comments. Go watch this video here about Free Arrows Capital, and I'll see you in the next one.